Ladies and gentlemen, good day and welcome to MTAR Technologies Limited Q2 and H1 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Irfan Raeen from Orient Capital. Thank you, and over to you, sir.
Thank you, Yusuf, and good morning, everyone. On behalf of MTAR Technologies Limited, I extend a very warm welcome to all participants on Q2 and H1 FY24 financial result discussion call. Today on our call, we have Mr. Srinivas Reddy, sir, Managing Director and Promoter, Mr. Guneshwar Rao, sir, Chief Financial Officer, and Ms. Srilekha, Senior Manager Strategy and IR. I hope everyone had an opportunity to go through our investor deck and press release that we have uploaded on exchanges and on company's website. I would like to give a short disclaimer before we begin the call. This call may contain some of the forward-looking statements which are completely based upon our beliefs, opinion, and expectation as of today. These statements are not guarantee of our future performance and involve unforeseen risks and uncertainties. With this, I would like to hand over the call to Srinivas, sir, for his opening remark. Over to you, sir. Thank you.
Thank you, Irfan, and hello and good morning to everyone. Thank you for taking your time to join us today. Today on the call, I am joined by Mr. Guneshwar Rao, Chief Financial Officer, Ms. Srilekha, Senior Manager, Strategy and Operations, and Orient Capital, our investor relation partners. We have uploaded our updated investor deck, press release, and results highlights on the stock exchange and company website. I hope everybody had an opportunity to go through the same. So MTAR has delivered a top-line growth by clocking a revenue of 166.8 crores with 32.2% year-on-year increase. We have reported an EBITDA of rupees 36.1 crores during this quarter. The most important aspect I would like to discuss today is about revision in our guidance. We have revised our annual guidance for FY24 to a revenue for around 670 to 700 crores, as against previous guidance of around 830 to 860 crores, with an EBITDA of around 26% plus minus 100 basis points. This is due to the deferment of shipment plans against the confirmed orders in the clean energy sector to the next fiscal year, which has impacted our growth in the short term. However, we anticipate a healthy long-term growth as we are expecting significant inflow of orders in the second half of the year from new customers as well as existing customers, which will enable us to maintain our closing order book around 1,400 to 1,500 crores. As far as this quarter is concerned, we have witnessed around rupees 80 crores of order inflows. We are expecting around the rest of the orders coming in from the clean energy sector, nuclear, space, and defense sectors, which will enable us to have a closing order book of 1,400 to 1,500 crores. The revenues from domestic shall pick up in the second half of the year due to major dispatches in nuclear, space, and defense sectors that we are anticipating at this point of time. I would like to assure all the shareholders that the company's long-term growth story is intact as we are working on enhancing our product portfolio and expanding our customer base. Also, the sectors company is catering to are witnessing significant growth. Our CFO, Mr. Guneshwar Rao, will throw more light on the financial performance of Q2 FY24. Over to you,
Thank you, everyone. Thank you, Mr. Srinivas Reddy. Good morning to all of you to join in this earnings call. I will take you through the financial highlights, post which we will open the floor for questions and answers. Our revenue from operation at 166.8 crore in Q2 FY24 as against 126.2 crore in Q2 FY23, which translates to 32.2% increase on year-on-year basis. And the company also reported EBITDA of 36.1 crore in Q2 FY24 as compared to 34.9 crore in Q2 FY23. There is a 3.4% increase on year-on-year basis. Our EBITDA margin, profit before tax is at 25.7 crore in Q2 FY24 as against 33 crore in Q2 FY23, which is 22.1% decrease on year-on-year basis. However, which is covered by the profit after tax. Profit after tax was 20.5 crore in Q2 FY24 as against to 24.7 crore in FY23, which led to 17.1% decrease on year-on-year basis. Our net working capital days stands at 287 days, where there was a reduction in receivable days and inventory days. However, there is a sharp reduction in payable days that has led to increase in working capital days because of liabilities paid for inventories purchased during the last quarters based on annual projections. As per the revised projections, current inventories will be sufficient to a major extent to meet the production requirements of the next quarters. We will be working on reducing net working capital days by end of this financial year. So let us see how it goes based on the revised guidelines. We are all working on reducing the working capital days as much as possible. So as discussed by our MD, we recorded healthy top line growth and company is working to generate revenue of around 600 to 700 crores by end of this financial year, with EBITDA of 26% plus or minus 1% by end of this financial year. So I think we will open for the floor for the discussion. Thank you all.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Deepak Krishnan from Kotak Institutional Equities. Please go ahead.
Hi, sir. Just wanted to check. So, because you're seeing healthy growth from Bloom Energy, 37% growth this quarter, 33% YTD. So, why the sharp, deferral in terms of revenue guidance for us? And in terms of order inflow, we had indicated 500 crores from clean energy. So, do we still expect that, that sort of number kind of comes through? Hello?
Hello, can you hear me, Deepak?
Yeah, I can hear you now, sir.
Yeah, I'm sorry, I was on mute actually. So basically, if you remember, Bloom Energy has shifted basically certain shipment plans on 2 counts, which is definitely not alarming because I visited them for almost 3 days in US to discuss the future growth plans and the current situation. One is there is a deferment of roughly about 1,200 units of hot boxes to the next fiscal year. The primary reason being, one is they wanted to correct their inventories. The reason they have mentioned is obviously because of the reduction in the transit time from 12 weeks to 6 weeks post-COVID era. They had to correct their inventories. Second is they have moved on from Yuma to Santa Cruz 100%. The reason which is very clear is that from Yuma you're generating 50 kilowatts and Santa Cruz generates 65 kilowatts. So we have made a couple of changes in the design. We're working with Bloom on that, which made a lot of sense to me when I visited them. I visited their facilities as well. They're fully gearing up to Santa Cruz, which generates 65 kilowatts. First, we manufactured the Block 1, and now we are moving to the modified version of Block 2. So what we are going to dispatch in this quarter is everything related to Santa Cruz Block 2, which is what is the final version of generating 65 kilowatts for them, which made a lot of sense to all of us. And these are the 2 primary reasons. I don't see any other reason for this correction what we have made in our guidance. Primarily it is coming from the reduction in the hot boxes for the current financial year, calendar year for Bloom, and for us, if you look at the calendar year, it is 4,600 to about 1,160 or 200 units less. And then we move on to ramp up the Santa Cruz model. See, we have to here look at the long-term perspective of Bloom and as well as MTAR. Now, moving to Santa Cruz will benefit Bloom to a very great extent. Thereby, they are generating almost 30% of higher power output with marginal cost increase. So this is just a temporary correction what they have made, and when we are phasing out from Yuma to Santa Cruz, it's a matter of 1 or 2 quarters. But even MTAR is gearing up to ramp up the Santa Cruz model to the extent where we can generate more units every quarter. So that's exactly what is happening right now. And as far as the orders are concerned, they are well poised to give orders for Santa Cruz. They revised the Yuma orders back to Santa Cruz right now. And moving forward also, they said that they will continue to release orders and their demand or whatever they're working on their back-to-back order book position, which is very strong, to enable them to place more and more orders quarter-on-quarter basis. That's what they mentioned to us.
Sure, sir. Maybe just one follow-up. Just wanted to understand the sharp reduction in payable days from about 108 to 49. What has triggered this? Because we're not seeing any other reduction in working capital for revised sales guidance, but this sort of pretty sharp reduction, and is it one-off or to sort of normalize after this?
Dinesh, let me explain this and then you can. See, what has happened is when I was talking to Bloom, when you have a deferred shipment plan, we were committed to sourcing all the raw material and bought outs ahead of the plan because there are definite lead times for that, right? So technically, most of our shipments either were in transit or have been dispatched by them. So we are holding higher inventories because of the deferred plan. And secondly, based on the kind of rating we have in DNB and we tend to pay all our payables on due dates. So we are forced to pay each and every payable on due date. So most of our inventories which we are holding right now are more or less paid, and we don't have to buy further inventories for the inventory reduction is going to be on the maximum side over the next 2 quarters. So that's why you see a reduction in payable days right now, but moving forward, we'll consume a lot of our inventories moving forward, and as well as the payable days should go up over the next 2 quarters based on our further purchases. Jay, you want to say more on this?
Yeah. Actually, you covered everything, sir. Today we are following the value stream mapping for each and every major processes. For a payable days, so in order to pay on time to the supplier is also one of the important criteria for us in this value stream mapping. So we had discussions internally, and we tried to reduce a lot of quality clearance days reducing and everything. We wanted to pay on time to our suppliers. So that is one of the reason, and the other reason is whatever Srinivas Reddy is explaining.
So maybe just one final question. Just wanted to understand on the margin, we've cut that down to 26%. Now, essentially, if clean energy goes down, mix should help us, improve margins, or is it like overhead is offsetting all the impact of, favorable mix that can come into it?
Yeah, absolutely. See, Deepak, when I said 26% plus minus 100 basis points, earlier I said 28%. See, first of all, there is a reduction in the guidance numbers given by us, but there is a ramp up on the domestic sales over the next second half of the year. Like whatever we have done in the first half, we are doing a lot more in the second half, which I mentioned earlier. So if you're looking at roughly, let's say 400 crores or 370 to 400 crores, almost 150 crores and not 140 to 150 crores has come from domestic and the rest from the export sector. So what we are looking at here is that we would like to be a little bit conservative on our estimates because of the reduction in the guidance plan, and also see where all we can enable to have certain cost reductions happening at various levels, and then we want to move forward with that. But this is something which we'll be able to achieve comfortably, and then we will see what best we can do in terms of upside, what we can get.
Okay, sir. Thank you.
Thank you. Next question is from the line of Dipesh Agarwal from UTI Asset Management Company. Please proceed.
Yeah, good morning, sir. So my first question is if you can help us with the number of the Yuma, Santa Cruz, and electrolyzers delivered this quarter and expectation for second half and next year.
See, what we have done is there was a phase in and phase out of Yuma this quarter to Santa Cruz Block 1, which I said. So we have done roughly close to about 400 units of Yuma and 200 and odd units of Santa Cruz Block 1, which has now been revised upwards to Block 2, as I mentioned, which is the final version of Santa Cruz. That's what we have done this quarter. And moving forward, we have an indication of doing, we have to again ramp up the Santa Cruz Block 2, which is going to be there as a final version for Bloom, as I explained earlier, because of the higher power output, and which is a very good achievement by both the companies to work together, and especially for Bloom, it makes a lot of sense to move away from Yuma and then come to Santa Cruz Block 2. And a lot of effort has been done to move into that direction. So we're looking at doing ramping up to 528 units, and probably the last quarter we're anticipating a much more ramp up happening in terms of Santa Cruz Block 2. And as far as electrolyzers are concerned, we are poised to dispatch around 44 electrolyzers this quarter and about 66 next quarter. That's what Bloom has indicated to us. And then based on their order book, how they're going to book the orders on electrolyzers, they're going to release further orders on electrolyzers as well.
Okay. So, sir, do you expect that starting next year will still go back to that previous run rate? This is just a purely an inventory correction?
This is not a purely inventory correction, Deepesh. As I said, it is also the change of model. In engineering, when you change from one model to the other, there is a phase in and phase out which happens, which normally happens, which is very important for Bloom and as well as a supplier to Bloom as well, right? When you're generating more power at a lesser cost, it makes a lot of sense. So obviously, this is just a correction, and we'll go back to the normal sequence, the growth pattern, which I've clearly mentioned that the growth pattern is there as it is. There's nothing changing from that angle, that part of it.
Sure. Sir, what is the update on the Fluence?
The update on Fluence is that we have almost finalized with Fluence. So basically, we are trying, there's a final negotiations which are going on. So they wanted to start off with about 1,000 units for next year, which is roughly around 120 to 130 crores range what they're looking at. So the final negotiations are going on. This is purely for export as well as for domestic. And in the long run, they want us to build facilities in a manner in which they can go up to about 3,000 units plus per year for their export and domestic requirements. So the discussions are going on. So hopefully in this quarter, we'll be able to close that issue for both.
Okay, sure. And sir, the other question is on the margin. So if we see last 3-4 quarters, the margin has been weak. So if we started with 29% kind of a range, then 28. Now the margin profile is much weaker. So anything to read into this over a longer term, or is it a transitionary phase and we should go back to that 28-29% margin range?
See, there's one thing which I want to mention to all the shareholders is that what is most important is we're also investing for the future. If you look at the manpower cost, it's not about, this is a highly technical based company. So things don't happen overnight. So whatever we are investing today is for the future in terms of our cost. So basically, when we look at for a company like ours, when we're looking at 26%, even now when I said 26% because of a valid reason, but in the long run, we'll definitely move to a higher margin level. I would not say like 29-30%, but definitely we'll proactively look at how we can achieve margins close to about 28%. That's what we're looking at over the next 1 year and moving forward as well, and trying to improve it further and further. So it's a combination of everything, and the entire team is working on it. And apart from the margins, there are a lot of other good thing is that a lot of new customers are joining us. So I don't want to go specific into customers because I could probably give more details in the investor one-to-one meetings. But what will happen is I'm getting a lot of pushback from many of my customers in terms of the kind of in-depth details I'm giving in all these calls, which I have been very transparent to every one of you. So basically, the kind of work which is being done within the company is phenomenal in terms of products, in terms of what we are actually working on in the R&D division for the future. And all of you can be rest assured that MTAR is on a growth track. This is only a temporary correction because of the change in model and the inventory correction which I mentioned. Other than that, we are adding a lot of new customers, which is a good sign for us.
Sure. I'll join back the queue.
Thank you. Ladies and gentlemen, before we move to the next question, a reminder to the participant. Please restrict your questions to 2 per participant in order to ensure that management is able to address the questions from all the participants in the conference call. Next question is from the line of Jonas Bhutta from Birla Mutual Fund. Please go ahead.
Good morning, Mr. Reddy. Just a couple of questions. Firstly, sir, when you say that about 1,000 to 1,200 hot boxes have moved from FY24 delivery to FY25 delivery, so would that mean that this year we will close the year with sort of flattish? So I think last year we did close to 4,500, 4,600 numbers. This year will be flat, is it?
Yeah, see, overall, it's not about these hot boxes. Obviously, because we're differing, the change in model from Yuma to Santa Cruz, as explained very clearly on us. And secondly, obviously, that change transition will happen over the next 1 to 2 quarters. What we're doing right now, we're also ramping up for Santa Cruz Block 2, which is very critical for Bloom as well. Because all of you should understand one thing, that when we are able to generate more power, obviously, we like to gear up to that particular model which has been redesigned and done, which is a fantastic thing from both, especially from Bloom also and also entire existing Bloom on this part of it. So the revenues will not be flattish, obviously, right? Overall revenues from 574, we are moving up to close to 700. But moving forward, again, the growth track is always there, intact in terms of the demand, what we have right now, the indications what we have.
Got it. And on the sales mix, which is giving you confidence that you will get to a 26% margin number by year end, when you say that the domestic business, which is effectively the non-clean energy business, if we have to look at a 670 crore top line for the full year, it implies about 360 odd crores in the second half. Last year, we did about 85, 86 crores from these non-clean energy segments. What would be that in the second half of this year, so as to give us this confidence that the sales mix isn't going to be in favor of domestic and hence the margins will go up?
If you look at the domestic, it's a very good question, honestly. If you look at the domestic business, the first half of the year probably was done around 50 plus crores. But the second half is quite close to about 145 to 150 crores. And we have estimated based on, before giving the guidance very carefully, and based on this jump of domestic sales happening in the second half, which normally it happens, we'll be able to clearly achieve what we have mentioned in our guidance.
Understood. And the last question I had was just a status update, because now if you are at 1,000 crore backlog and you are looking at a 1,400 to 1,500 crore closing backlog, and in the intervening period you will be executing another 350, 360 crores, which really means that you need close to 800 crores of new orders in the next 5-6 months. Can can you just give us a status update on how much of that from clean energy and how much on nuclear? Where do they stand? And, can they realistically flow through by March 24?
The first update I would like to give is that, as I mentioned to you, 2 reactors, Tiger 5 and 6, the tenders have been opened. There are 3 competitors for that. This is available on the public domain as well. One is BHL, one is L&T, and one is Mega Engineering. 3 of them have bid for these projects, out of which MTAR's actual number is around close to 600 to 700 crores, but we have, as mentioned earlier, that I'm looking at around 500 crores of order intake coming from these companies as such, because we are qualified for 17 packages as well. So, what information I have right now is that probably they'll finalize it by end of December. The price will be opened and they'll finalize it, and once then MTAR should have back-to-back orders coming in the last quarter of this year, which I have mentioned earlier, and I maintain the same thing, and it is progressing in the right direction, because these 2 projects, Tiger 5 and 6, especially the PMO office is looking at implementation within 4 to 5 years, or probably in 4 years, and that's why they're doing this kind of experiment with Tiger 5 and 6. But the rest of the orders or reactors will go in the normal situation of directly placing orders with MTAR. So that's what it is. Now we are expecting a lot more orders coming in from space. The way we have done remarkably well in terms of successfully launching successful launches that we had recently, and also in the defense sector, we are getting a sizable number of orders over the next couple of quarters. See, as far as clean energy is concerned, we are getting enough orders. There are new customers. Just said, I don't want to go more into the details in this call, but we are going to get substantial orders from the other new customers that we have. And Bloom obviously is going to release orders. As I said, they are going to release orders on quarter-on-quarter basis. So keeping all this in mind, we should be in a comfortable position to have a closing order book of 1,400 and odd crores by end of this year.
Sure, sir. This is helpful. I'll fall back in the queue and wish you all the best, sir. Thank you.
Thank you.
Thank you. Next question is from the line of Yelappu Santosh from Asian Market Securities. Please go ahead.
Thank you for the opportunity, sir. First thing I would like to understand, sir, some part of the growth for Bloom in the recent quarters has been driven by most of the deals being pursued through the tripartite agreements. I think now with the interest rates almost the first, we had seen the gas prices getting doubled, and now we are seeing the interest rates also getting doubled almost. What we get to understand is that the viability of these projects is not that easy for Bloom to grow through this strategy. So have you heard anything on that? Even Bloom in its Concall has also mentioned that, if I'm not wrong, I think some 60 gigawatts of projects are running slow. So just wanted to get your perspective. How does that impact our business coming from Bloom?
I don't think there is I've been there for almost 3 days with Bloom, and they have said that they're going to release the orders. The main focus was on the new model, which makes a big difference for Bloom. I don't see any other reason why there should not be any kind of, they've not indicated any kind of, slowdown in kind of growth, but they're also looking at placing orders based on back-to-back orders they have, and they want to move forward in that direction. And they have indicated to us that things will get back to normal and the growth phase once we ramp up on the Santa Cruz Block 2. So that's what they've indicated to us. And they said that the upside to the order book position will go higher and higher based on how they also get back-to-back orders from their side. So, and they're pretty confident about it, and that's what they've mentioned to me very clearly.
Okay. And sir, on the call, they just mentioned that they are getting more acceptance on the use case for the electrolyzers with multiple platforms. So can you please give more insights upon what could be, how would it translate for us from an opportunity point of view?
See, our electrolyzers have already been proven, as I've mentioned in the last call. So they've asked us to dispatch 2 consignments of electrolyzers this quarter and 3 consignments next quarter. So once they book the orders, they said the back-to-back orders will come to MTAR. So we are hoping that they will get over the next couple of quarters before March. I'm hoping that they will book enough number of orders so that MTAR can benefit from that and start the electrolyzers dispatches from there on.
Any volume numbers for the next 24 and 25 and 26, please, on electrolyzers only?
Santosh, it depends on the kind of order booking the Bloom does on that. So they're very optimistic and very very confident that they'll be booking enough orders. But I can't quantify the numbers. But as I mentioned earlier, that vertical is going to pick up as the whole world is looking for it. So hopefully that we start generating us enough revenues for next year.
Okay. And sir, on the non-defense related, for last, I think if I'm not wrong, for 5-6 quarters, we've been hearing new client names, new clients getting added from the likes of GE, Andritz, Voith, all these companies. But I think we hear that we qualify for the first batch of works to be done. But after that, haven't heard much on the traction from these clients, or even on the defense side. Like, if I am not wrong, we had some qualification done with the Tata TSL, and the other IAI, but not much has happened. Can you please give some insight? What can happen from these new clients in the next at least 1 to 2 years point of view?
No, obviously we have done a lot of first articles. We have done certain batch productions. Everything has been proven right now. It's a matter of time that we get up into a much higher number. For example, in the new fabrication shed, we are looking at a substantial growth in revenues because of all these plans for next year. See, in engineering, Santosh, if you understand, you know very well that once there's a process of doing the first articles, then the pre-production batch numbers, and then we go on to the regular stuff. So a lot of effort is being done on this, and this is exactly what I'm trying to say is that there is a lot of internal work which is being done in MTAR for the future, which does not reflect in your numbers. But believe me, we have done some fantastic work, and we will have those results over the next year and the year after that. So absolutely we are on track with all of these things.
Okay. And sir, lastly, on the SSLV technology front, have you participated in the tender or where the request was invited for transfer of technology?
We have not, still it's in a pre-qualification stage. The tender is not officially done. So that we'll know about it probably a month or 2 later. But our main focus is on our own SSLV, right? We have probably over the next quarter, we have done a substantial progress in our SSLV development program. And this is something which is not reflecting anywhere for all of you to understand. So we have done a phenomenal progress. We are right on track with our milestones. And probably I would ask my Senior Project Director, Dr. Vidyacharam, to update all of you in the next call. Or any one of you are free to visit our company to see the kind of progress we have done, which I personally reviewed it the other day, and we have done a phenomenal progress in that. And probably all of you are free to visit our company and see the kind of progress we have done successfully, which I'm really impressed with the kind of effort being done by the team of scientists working right now on that.
Great, sir. Just follow up on this. I need a clarification because NISL chairman has indicated that only one company will get the TOT done for this SSLV. If we don't get the technology, will this program stop for us, or we'll find a way to build it internally? This is where I'm just stuck up at. That are we just dependent on the technology transfer, or we are working in-house? How to look at it from that point of view, sir? Because
you're getting confused, Santosh. The SSLV program, what MTAR has started, is purely MTAR's internal know-how and technology. That's the best part of it. We are not depending on anybody. What agreement we have with ISRO is on certain testing facilities and other areas which we will be taking their help. That is where it stands. It has got nothing to do with COT as such.
Okay, understood. Thank you, sir.
Thank you. Next question is from the line of Anika Mittal from Invest Analytic Advisors LLP. Please go ahead.
Good morning, sir. So my question is regarding the Santa Cruz boxes. Sir, are we the sole supplier for Bloom for Santa Cruz boxes, and our product is totally defect-free and good in quality?
So we are not a sole supplier. It's, as I said, we hold the majority of the portion of the requirement, close to 70%, I guess. I'm not too sure, but it's up close to 70%. And there's another company in Taiwan which I always mention to all of you that the rest of the thing is done by them.
And with regards to quality, sir, is it defect-free and good?
Can you repeat that question? I'm not able to hear you well. Yeah.
Hello?
Yeah, please go ahead.
Sir, my question is, with regards to quality of Santa Cruz boxes, is it totally defect-free?
Yeah, absolutely. That's what I've said. We have worked with Bloom, and Bloom has done a phenomenal job as well. I know I was there actually looking at all this, and they've done a fantastic job. And it's phenomenal that from 50 kilowatts they're moving up to 65 with marginal cost increase. It's a fantastic thing they've achieved. And we also contributed work with them in areas that we are involved in, not in every area. But that's something which has been crystallized now, finalized, and we are moving on with our shipments right now.
Thank you, sir. That's it from my side.
Thank you.
Thank you. Next question is from the line of Bala Murali Krishna from Oman Investment Advisors. Please go ahead.
Hi, good morning, sir. Congratulations.
Good morning,
Bala. Yeah, regarding this Santa Cruz boxes, I think then going forward we produce only this Santa Cruz version 2, or we will produce some Yuma hot boxes also.
No, as I mentioned earlier, Mr. Balakrishna, that the Santa Cruz Block 2 will be the final version, and we'll be producing only Santa Cruz moving forward. That's why I said there is a transition from Yuma to Santa Cruz, and there will not be any further Yuma moving forward.
Okay, sir. And in the electrolyzers, so any further orders from any other customer, or we are in discussion with any other customer for a supply of electrolyzers?
See, electrolyzers is completely a new product as it is, and Bloom is one of the premier companies which have come out with a product which has been proven in United States as well. So right now we are working with Bloom, and the others are still in prototype and various other stages. So we have to see how it goes. But as of now, we are hoping that obviously the whole world is looking for this. And once Bloom back orders, then we'll also get back-to-back orders for electrolyzers as well, which is going to happen over the next 2 quarters for sure.
Okay, that's great. And regarding this defense license, so we have received the license as you said in the last call. So what would be the potential in the coming quarters or next year, and any new products we are going to introduce under this license? Could you please throw some information on this?
This is a very good question. Definitely, we have received the defense license after 18 months to 2 years, and that's something a phenomenal thing for MTAR. As I said, we have to go through about 20 to 25 different various departments to get the clearance with the clean sheet. Obviously, our team is working on various products. I don't want to highlight them right now. It's too premature, but we are working towards it. And this is something which is going to be moving in a very good position over the next 1.5 years. So once we are at a certain stage, then I'll be giving you more details on this. We are definitely working towards those things.
Yes, sir. And lastly, answer this fuel cell technology that as of now there is a collaboration between some EV buses manufacturers, Reliance also to produce buses which can run on hydrogen and fuel cells also. So is there any opportunity for us and any discussion with the Hyderabad-based EV bus manufacturer regarding this?
No, not right now. See, a lot of announcements are being done, but end of the day, all these companies have to come to a stage where they can really come to a level of the kind of volumes that we look at. See, when we look at any customer or any opportunity, a lot of effort goes in engineering in terms of building that product for them and as well as working jointly. So we need to really see the commercial angle of it also and then move forward. So we evaluate things that way. And let's see how many, there is a sizable kind of opportunities coming to MTAR from all the sectors right now. And we're evaluating each one of them and working towards it. So let's see how it goes.
Okay, sir, that's helpful. And lastly, on with your plant visit, maybe in the month of March, April, I may visit. So I need your help.
Absolutely. You're always welcome to come and visit the plant. I've said to all the investors you should come and see because, see, at the end of the day, it's about what you need to see about MTAR is what we are doing here and how we are poised in terms of what we are as a company in terms of engineering and how we're working on various aspects for our future growth. So you're always welcome to come and see.
Okay, thanks a lot, sir. All the best.
Thank you. Next question is from the line of Ashish Shah from JM Financial. Please go ahead.
Yeah, good afternoon and thank you for the opportunity. Sir, my first question is that on the production schedule that we expect from Bloom in this quarter and in December. So is that, will you get a schedule for the entire next calendar year or it is going to be for 1 or 2 quarters at a time? I mean, how does this typically work, sir?
So they give a clear production schedule for the current quarter and for next quarter they indicate to us probably in the month of December. The reason being we already have inventories lined up for whatever volumes they want to give us. In the case of inventories not being lined up, they give us ahead of time so that we can source the material. In this case, we have enough inventories lined up. So we're expecting the schedule for the next quarter probably in the month of December. So we are on track with that. That's how it works.
Right. So secondly, apart from the hot boxes or the even including the newer product that we are supplying now, there are other elements of the supplies that we have in terms of ASPs, dye liquids, increasing our volume share there. So in the past you have given some visibility of how these things can also scale up. These products can also scale up. So anything that you can add here, sir?
See, right now we are doing products like ASP, hot boxes, enclosures, sheet metal assemblies and all that, right? So when I spoke about the revenue guidance when the hot box deferment plan happened, it had a little bit of effect on the other areas as well, right? Obviously that's how we come up with the revised guidance number, which will be back to normal as we move forward. That's not an issue. So good thing is that we are qualified for all this. We have done the shipments. They've accepted it. All the new products we have done. They're working very well on the field. And we're also working on additional products for them moving forward. So as and when we get qualified, we'll be adding a lot more products with them as a customer, which they've asked us to do. We're working on those things. So that will also add up to our future growth, the way we're looking at it.
Right. And so looking at the second quarter gross margins, so when one looks at the increase in the raw material cost, as a proportion, what would you attribute this to in terms of the mix? I mean, what element of the mix drives this, and how it will change, for us in the next 2 quarters?
That's what I've mentioned very clearly. The next 2 quarters, the domestic is almost 3 times the revenue what we have generated in the first 2 quarters. So the gross margins will improve and ultimately the EBITDA will also improve. We have done an estimate of 26% plus minus 100 basis points will be there.
Right. And so lastly, we are expecting this nuclear order from Kaiga 5 and 6 to close to us by the end of this year. Now, how will be the conversion of revenue out of this? Will we see a substantial part of it starting to get cut in 25 or this would take more than 12 months to start flowing into the revenue?
See, we already have orders on hand for nuclear directly from NPCL. We will start dispatching those next year. But by the time these orders come in March, then there is a lead time for raw material and things like that. So we are more or less, this is not related to the next year numbers. It will be related to the subsequent year numbers.
Got it. Right, sir. Thank you. Thank you for your answer.
Thank you. Next question is from the line of Lokesh Maru from Nippon India Mutual Fund. Please go ahead.
Hi, sir. My question is more around the Santa Cruz boxes. So what is our capacity at this point, and what is the kind of volume, like number of boxes that we expect to ship in Q3 and Q4?
See, the capacity is the same as Yuma. As I said, the design is different, but the assets are fungible. So that's something which we have done. And we have made some corrections in our manufacturing process to work on the Santa Cruz. That's how the ramp-up is happening. So we are looking at, as I said, for this quarter, we're looking at around 500 odd units moving out. Then we'll have an indication from Bloom on the higher number for the next quarter. That will low by December because we have all the inventories already lying with us. So we're also looking at how we're going to ramp up with this new design moving forward as well. So we'll have more clarity in the next month.
Some related question. So we would have delivered 4,500 boxes last year, Yuma boxes. Given that the capacity of Santa Cruz is 30% higher, the delivery capacity, I mean, on power side. So do you expect by when, as in your internal expectation, to reach 4,500 first and then outgrow that number? Is it fair expectation to do that by next fiscal and grow beyond that, or should it take time?
I think so. I mean, we'll have a more details from Bloom as they let us know about it. But as of today, we are on track with what we're going to do for the next year. So we'll be back to the same growth pattern what we're looking at in the past. So it also depends on the kind of demand they also have. But we'll definitely have that kind of numbers. And plus, we're adding a lot more other products as well. So we are clear in the growth pattern, which we clearly said that which is intact moving forward. There's nothing changes with that.
So also, last question on this part. When we shift from 50 kilowatt to 65, there has been a transition period which we have seen these 2 quarters. Going forward, when we shift from 65 to either 75 or 100, right, the other 2 variants, is it business as usual? Is it the normal? Does it normally happen that it takes time of a quarter or 2 to ramp it, and then there is a lull in between, or do we keep executing? Because obviously, when you shift from 50 to 75, 65, we have to discard the 50 ones. So there is going to be a phase of pain, right, in terms of growth or delivery. How do you expect going forward the Santa Cruz to actually upgrade and the journey beyond?
See, the journey beyond Santa Cruz Block 2 is going to stay. To my knowledge, the way I've reviewed things there, at least for the next 4-5 years, nothing is going to change with Santa Cruz. So that's the highest that we can achieve from 50 to 65. But they might introduce, which I've said earlier, they're looking at new models, which will take some time. But Santa Cruz is here to stay for sure.
Okay. So on gross margin front, EBITDA margin is quite understandable since we have deferred our sales. But what has impacted the gross margin this quarter?
Yeah, you want to explain on that?
Yeah, this quarter actually what happened, we have delivered some of the nuclear projects which was actually going on for quite some time. So that is actually the overhead portion is impacted this time. So otherwise there is no issue. But as our MD said, next 2 quarters our domestic sales will be higher. So it will be, we are confident to achieve the 26%. And other things below the gross profit, the fixed expenses, operating leverage, we have established all the requirements for 800 crores turnover, so which has impacted around 2% to the EBITDA margin. So in the year end, definitely we will achieve 26%, keeping into the consideration of domestic sales will be higher. So also we are taking lot of steps to reduce our costs wherever possible.
No, sir. My question is more on, so obviously capacity building and overhead cost would be below gross margin, right? So just on the raw material cost front, what is impacted?
The raw material cost is more or less same for the domestic is lower, and whereas for export is higher. Because of the mix impact, so sometimes it will impact. The domestic turnover is also lower in this first 2 quarters compared to the next 2 quarters.
Okay. Understood, sir. Thank you so much.
Thank you. Next question is from the line of Bhavin Vitlani from SBI Mutual Fund. Please go ahead.
Good morning, Mr. Srinivas.
Good morning, Bhavan. How are you?
Very well, thank you. Sir, this question is on the import substitution opportunity that we spoke some time back, like ball screws, the water lubricated screws, and the roller screws, and what our understanding is, some of these are critical parts for the CNC machines, and this is a segment which is growing very rapidly in India. And is it that are we able to get through to some of the domestic manufacturers for this, because the opportunity could be pretty significant?
See, the first thing is the water lubricated bearings are used primarily in the nuclear reactors. So we are the only people who are supplying it, which we are doing it from, it's an import substitute as well. Ball screws, we are moving towards specialized ball screws. We don't get into ball screws mainly on the machine tool area, which is run in the mill stuff. So we are working with a lot of export companies right now, working on the first article ball screws in terms of exporting the ball screws in various sectors, in aerospace, and that's what we're doing right now. And another thing which is important is the electromechanical actuators. We are releasing the first 3 electromechanical actuators in, I think, quantities of 10 or 15 numbers each to the defense sector next quarter. So that's something which is very encouraging for us. So we are working on all these products which are like 100% import substitute that we're doing right now. And coming to roller screws, we have done everything. Our roller screws have been tested, have been proven. So we're just waiting for the final certification from the defense organizations to approvals. And once it's done, then it becomes another import substitute which the space and defense organizations can use from us.
Right. So, of all these import substitution opportunities, what could be the revenues in the current year, and what's the potential in the next fiscal?
So I've told you, electromechanical actuators over the next 3-4 years, the requirement is around 300 to 400 crores. It all depends on the way the defense organizations move forward with their requirements. Roller screws, right now they are importing from Rollway, Sweden. So once we are certified, then obviously the entire requirement comes to us. So I am not able to quantify exactly the numbers, but as an overall the market for roller screws is about 70 to 80 crores, but the margins are very good in that. This is a very specialized product. And over the last 30-40 years, we have been importing it, so we are going to put a full stop to that.
Okay. And would we need additional investment towards the machinery, or we would be able to sweat our assets, existing assets, and we'll be able to get this additional revenues?
We have already those assets in place, so we don't need any additional capex for this.
Sure. Great. Yeah, those were my questions. Thank you so much.
Thank you. Next question is from the line of Abhijit from Yes Securities. Please proceed.
Good morning, all. Thank you for the opportunity. So my first question, sir, is there any inventory write-off during 2Q FY24?
No, we don't have any inventory write-off. Yeah, can you confirm that? I don't think there's any inventory.
We have not any inventory write-off.
Okay. Sir, also, So if we look at from the last quarter to this quarter, there has been a sudden change in plan by Bloom for supply. I mean, earlier we were to supply the Yuma hot boxes from that plan to now supplying the Santa Cruz, which are more efficient. Now, sir, in this technology space, efficiency would be chased by these players continuously going forward also. So, sir, how do we plan to counter this kind of sudden changing plans that we don't take a hit on our books? Because this seems to be quite sudden. Like last quarter, what the plan was from that plan to this plan now, there is a sudden change. It seems like. So, how do we plan to counter this going forward? Given that technology efficiency change would be an ongoing thing even in the next few years.
See, basically, the change primarily was quickly brought in is because of the kind of additional power output they're getting, which is substantial, right? If it is not substantial, then it is gradual phase in and gradual phase out. For example, when Bloom started, they started with a model called Catalina. And from Catalina to Yuma, they took substantial time to phase in and phase out. But when they looked at an increase of power output by 25 to 30%, 50 to 65 kilowatts, it makes a lot of sense, right? So, fortunately, there's a design change, but the aspects are fungible and not much changes were required, but we also need to ramp up to that level, and which is understandable. So, such changes, these kind of changes don't happen every time. It's like once in 3-4 years like that. There will be certain design changes which will not affect our ramp up at all. Certain improvements, certain reduction in cost in terms of the cost related to design, certain small design changes which will reduce the input raw material cost and things like that. So, for example, if they're using Inconel, they might go to some other material which can also give them the same efficiency with lower costs. So, those kind of changes will happen, but that's not going to affect our ramp-up plan at all. So this is something which has to be done, looking at which has been a phenomenal effort from Bloom as well, and it makes a lot of sense to us also.
Okay. So, sir, you are reasonably confident that 65 kilowatt hour, so this kind of efficiency is kind of, this will remain for some time going forward, and further efficiency improvement that would come at least some few years down the line. That is what I could understand. Is that right?
Absolutely, yes.
Okay. All right, sir. Thank you so much for answering the question. That's it from my side.
Thank you.
Thank you. Next question is from the line of Dipen Waki from Incred Equities. Please proceed.
Thank you for the opportunity, sir. So my first question is on order book, sir. Our space and defense segment accounts for almost 18% of our order book. So how is the execution period for them vis-a-vis execution for the pending order book and for clean energy?
So clean energy is much faster. As I said, only except for this technology change from Yuma to Santa Cruz got deferred. But other than that, the order turnaround time is very less. That's within the calendar year in most of the cases. And then moving forward, you have to look at it. So space and defense, they take a lot longer. So probably whatever order book we have, we'll try to, depends on the free issue material. So everything is related to the free issue given by the departments, but there we don't have the raw material content. So the cycle is more or less like within a year or year and a half or two, we'll be able to close on those orders.
Okay. So, and my second question is on our guidance revision. Sir, we have downgraded our guidance to almost 160 crores. So this deferment of shipment, do you think that will lead to a bump up in our execution in, say, early FY25, so versus our regular growth, or even the complete execution will be shifted to FY25?
The execution part will be for the next year, right? Whatever has been deferred, right, it will be for the next year, especially moving from Yuma to Santa Cruz. And it also depends on the kind of, the orders Bloom is looking at with the new model, things like that. So it will not really affect our future growth plans at all. It's a temporary correction. What we have today, we have a change of model and inventory correction. Other than that, I don't see much of a difference happening moving forward.
Got it, sir. Thank you so much, sir, and all the best for second half.
Thank you.
Thank you. Next question is from the line of Amish Kanani from JM Financial Service. Please go ahead.
Yeah, hi sir. So a couple of questions. One, if you can give us, because now the order book from Bloom is a little bit more, short order instead of a 1-year order, which we got it say last year this time. If you can give us some sense of the overall order pipeline of say from Bloom and also overall from the energy segment, the clean energy segment. Is it same or say more than 30% same time last year? That's the rate of growth that we are used to grow. If you can give us some sense and flavor of that, that will help because now we don't know how to look at our order book where we'll have some quarterly schedule from Bloom. Thanks.
So Bloom has not indicated that they'll give us on a quarterly basis, but they have said that. But they want to stabilize on the Santa Cruz version 2 or block 2 model. Once they do that, then they'll move forward to the annual contracts as well. So that we'll know over a period of next 1-2 quarters. So it is not that they will not release orders for the entire year, but as of today, we're looking at quarter-on-quarter orders being released, but probably they will look at giving orders for the entire year once the whole thing gets stabilized. So that's already there. It's proven and block 2 has been proven. Everything is right on track with that. So the overall growth, as I said, is intact. So there's nothing to think twice about it. We've added a lot more companies in clean energy. I just don't want to go into details because of the lot of pushback from various customers and internally we discussed about certain competitors as well. So we want to be very clear on that. So the overall growth track is intact for us and we'll move forward in that direction. There's absolutely no issue with that.
Yes. So I'm not asking for the names of the peers, but overall totally order pipeline or prospects as we call. Is it total prospects this time versus say last year this time? Is it say more than?
We definitely have the growth percentage what we have mentioned. That should not be an issue. Overall growth percentage. Yes.
Okay, sir. And sir, for example, probably we are looking at Bloom growing at say between 20-25% versus probably 50-60% expected. So is it possible for and given that different execution schedule for different vertical, can you throw some light on, maybe it's too early, for the kind of growth that we might have for FY25 or the execution timeline of this 1,500 crore order book that we are expecting by end of this year? How should we look at it?
Yeah, it's too premature, Ashish. I mean, to tell exactly the kind of growth we are looking at for next year, but we are looking at definitely a reasonable and good amount of growth for next year. If I say like 30 to 40%, I'll be saying approximately, but I'll have more clarity by end of by next quarter. But we are on track with reasonable amount of good growth going forward next year for sure. But I'll come out with clear percentages by next quarter for sure.
Sure, that helps. And sir, overall products wise, you did mention, on the boiler screw side, but overall, how is the product ramping up? Is it in line with expectation or it's panning out better than our expectation? You can
It's in line with the expectations, what we are looking at, but we still need to get certain certifications done, which will happen over this quarter and next quarter. So we are on track with that. That's not the issue.
Okay, thanks a lot and all the best.
Thank you. In the interest of time, this would be our last question. I now hand the conference over to Mr. Srinivas Reddy for the closing comments.
So I'd like to thank everyone for attending this call. And once again, I would like to reiterate that we are right on our growth track. It's only a temporary correction because of the technology change from certain areas of clean energy, which has shifted certain revenues, but we are on track with our growth plan and we are doing a lot of work. I appreciate the entire team of engineers in MTAR who are working on some phenomenal work in R&D for the future growth of this company. And I welcome any of the investors who are willing to come and visit us and see what kind of developments we have done for the future of this company and as well as on our SSLE project, what we are working on right now. And seeing is believing. I truly believe in that, and I would invite each one of you to come and see us and visit our facilities and our team to understand where we stand in terms of what we are doing for the future, which does not really reflect in numbers on the balance sheet, but you're welcome to visit us. Thank you so much.
Thank you. On behalf of MTAR Technologies Limited, we conclude the call. And for any queries, you can reach out to Orient Capital at irfan.rain@linkintime.co.in. Thank you all for joining us, and you may now disconnect your lines.